Welcome to the CBIA BizCast powered by Google. I'm Amanda Marlow. In today's episode, we're digging into major recent developments in the Trump administration's sweeping global tariffs. In late February, the U.S. Supreme Court struck down the tariffs imposed under the International Emergency Economic Powers Act. While the ruling was welcomed by many businesses, it also created new economic uncertainty. To break down the tariffs and its potential impact, we are joined by the director of the CBIA Foundation for Economic Growth and Opportunity, Dustin Nord. Dustin, welcome back to the BizCast.
Yeah, thank you for having me.
So obviously, uncertainty is kind of top of mind. It's what's keeping business leaders up at night. Tell us, about these tariffs and what the impact might be.
Yeah, so the tariffs, obviously, we've been talking about this for over a year at this point, and we've been wondering when this decision would drop, whether or not the Supreme Court would strike down this particular set of tariffs. And so this is obviously welcome in some respects, but it definitely represents new uncertainty for these businesses in terms of refunds, in terms of what future tariffs might look like. There were deals that were created with other countries that obviously impacted certain producers more than others, and how the new rules that have been put in place, how the changes to these rules impact those businesses is still very unclear. It's still very early days on that front.
Yeah, I mean, these tariffs have such an impact on what type of investments businesses are going to make. And with uncertainty, they can't make those.
Correct. Yeah, you're looking out months and years. You're trying to plan out your supply chain as well and understanding where it is you're going to be purchasing your goods, your intermediate goods from. With these types of tariffs in place and changing regularly, that creates uncertainty. It makes it harder to actually find where those suppliers are going to be the best fit in terms of reducing the cost for your business.
What happened immediately after the president declared an even higher tariff? Can we talk a little bit about that?
Yeah, for sure. So, I mean, the initial tariff, the IEEPA tariffs that were ultimately taken away, that effectively cut the effective tariff rate in half immediately. Most of that was gained back by the new Section 122 tariffs that were created, which are a 10% global tariff on all goods. And it equally distributes a lot of that tariffs across different countries, as opposed
before
to
they were a little bit more balanced.
Different depending on where you were going. So there was some, very high in Brazil, for example, in China, and we had reduced them down in the UK. Now it's pretty much the same across the board, or at least, over time it will kind of converge towards the same level. But ultimately, while that's good in some ways, it also creates new challenges in some ways.
How costly do you think this is going to be?
It's hard to say exactly how costly it is, but just to put in perspective on the size of the refunds that we're talking about right now, there's some controversy about when we're going to pay out those refunds to people who have paid tariffs. Essentially, since they were declared unlawful, companies are owed some of that money back. And the interest on that money that we're not paying right now is worth about $700 million a month, just to put in perspective how large of an amount of money we're talking about. And so while Connecticut is 1.5% of the country's GDP, that would equate to millions of dollars a month in terms of where Connecticut businesses might be eligible for some of those tariffs. And I think that just shows the size of this problem that we're talking about.
Yeah, I mean, certainly it's a big part of Connecticut's economy. Do we have any, indication of what types of businesses? Obviously, manufacturing is huge in Connecticut. This was, under the Trump administration, the goal was to bring manufacturing back to the U.S. Is this going to help manufacturers in the long run?
I think there's two things on that front. I think one is that the uncertainty plays a role in that. We were hearing from companies, especially foreign companies, that were interested in setting up shop in the United States, potentially in Connecticut or in New England, shortening their supply chain, understanding that there's this new tariff uncertainty. How they respond to this ruling and what that means for their business plans, I think, is part of the challenge in terms of what that means for reshoring. In terms of the companies that are already here, I think what we see is that it was a challenge for them over the last year. We saw manufacturing employment across the country decline over the last year. In Connecticut, it was substantially worse. It was our worst year for manufacturing decline since the Great Recession outside of COVID. So it was a very tough year for manufacturers. So to the extent that this was revitalizing Connecticut manufacturing, it's clearly not in the data so far. And I think it's been a challenge for a lot of our in-state manufacturers.
Yeah, I mean, a lot of manufacturers that we've talked to say, in terms of long term, they need a little bit more runway.
Yeah, exactly. They need to be able to plan. They need to be able to have certainty. But even in that side, there's always going to be winners and losers as it relates to tariffs. I think what economic theory would suggest is that there will be more losers than there are winners. And I think what we saw over the last year is that probably is going to be the case in this instance as well, just as it was when we had our first round of tariffs during the Trump administration and additional tariffs during the Biden administration. So the additional tariffs that we're seeing definitely they're a drag on economic growth broadly. If they're serving other interests as it relates to onshoring and domestic production, it still remains to be seen how that's supporting that and what that will ultimately look like in the long run.
What have we seen with Connecticut's GDP just in this last year? I mean, even in this last quarter, and how do you think that might change in the coming quarter?
Yeah, Connecticut had one of the fastest growing economies in 2025. At least through quarter three. And so in Q3, we were top 10. I think we were seventh fastest growing economy in the country. And I think what that shows is a couple of things. We had declining employment. So that means that we saw strong productivity growth, which could suggest very strong investment from certain players. Places like warehousing saw really strong growth. There were a couple other sectors like finance and insurance that saw really strong growth. So that might be the implementation of new investment into those areas that make their workers more productive. Whether or not that can continue over the long run, or whether there are some of these roadblocks ahead, like the lack of job growth over the latter half of the year. In the end, we had negative job growth for the year in the state. How that impacts overall economic growth sort of at the end of 2025 and into 2026. I think my expectation would be that it'll be a little bit slower. But again, that's dependent on what kind of other investments are companies making and, how are they trying to mitigate some of these costs that they're seeing.
Certainly something that you're going to be keeping an eye on very closely.
Yeah.
When we talk about trade policy, obviously that happens at the federal level. But is there anything that we can do here in Connecticut to help these businesses with this uncertainty?
Yeah, absolutely. I think that federal policy, like you said, it impacts the entire nation when we make trade policy. But Connecticut had a worse year for manufacturing last year than the rest of the country by a significant amount. So it's clear that there are things that exist here in the state there are conditions that are not present elsewhere. And so those are things that there are things that are levers that we can pull as a state, things like housing, energy costs, childcare, healthcare. Those are areas where we have direct influence on the ability for our companies to be competitive on a global market. So to the extent that we can invest in those areas to make it cheaper in those areas, I think that's where we can find our competitive edge to ultimately allow us to grow into the future in spite of these federal headwinds.
Yeah, because those are impacting all companies, not only manufacturers, but again, those financial services sectors as well.
Yeah, exactly. I mean, outside of manufacturing, our biggest sectors like finance and insurance and professional and technical services, they had their own types of headwinds in 2025. And looking ahead towards 2026, they're impacted by those same exact costs. So to the extent that we have these general levers that we can pull to make it easier to do business in the state, I think that it would behoove policymakers to look at those to make it a more affordable and more competitive state.
Rather than just saying, well, these are tariffs, but they're impacting every.
Exactly. I think it doesn't do us any good to be dismissive of the current situation just because some of these things are out of our control. There are very clearly many things that are inside of our control. These federal policies, I think that will always be the case. There will always be shifting sands in terms of what's going on around us. And it's our prerogative to ultimately find the things that we have control over to make it easier in the state to do business.
Okay. Well, thank you, Dustin. We appreciate your time.
Thanks.
One of the other hot button issues for businesses is the rapid rise of artificial intelligence. In recent weeks, the power of agentic AI is top of mind, and our recent technology summit featured important conversations on the state of AI for businesses and the balancing act for policymakers as they regulate AI without stifling innovation. We want to bring you to part of those conversations right now.
Really honored to be here today with three fabulous guests, Senator James Moroney, Tatiana Rice, and Josh Gabal. Senator Moroney, I'm going to start with you.
All right, thanks.
You helped lead passage of the Data Privacy Act. You authored and sponsored for 2 years in a row now comprehensive AI legislation in Connecticut. But at a high level, what's the current state of AI policy in the states?
You're not going to see as many of the more comprehensive, high-risk, consequential decision-making bills. A lot of those are actually going into the regulations now. You're going to see more industry-specific, I think, algorithmic pricing, and then addressing specific harms, so chatbots. Those are really the two big areas. So I think the major shift we're really seeing is going from being proactive trying to address think it through and work together to come up with a framework to now reactive where we're seeing harms.
Josh, turning to you at Yale Ventures, you sit in a very interesting position at the intersection of university research, startup formation, venture capital, commercialization. You're seeing AI move from the lab to real companies and real markets in real time. From your vantage point there, what has actually changed technologically in the last 2 years since we started debating these topics? And how should policymakers like Senator Maroney and others think about where this technology is headed?
Much of what we're seeing happen with regards to AI and the research at Yale is just moving so fast and has so much promise to solve or help address many of the biggest challenges we're facing in society. So at Yale, we have a lot of researchers who are using AI to streamline and reduce the costs of discovering new molecules that could potentially become the cures for diseases. There's a number of projects we're supporting that have incredible potential to help scientists kind of shrink the time and cost of bringing new therapies to market, which is incredibly exciting. All the way through to faculty from our law school who were inspired to try to come up with a law bot that would provide more accessible, lower cost access to reliable, trustworthy legal services for people who couldn't otherwise afford them. With regards to the second part of your question, I'm actually really encouraged to hear the senator's perspective on how the regulatory approach is shifting from prior years. I think my view is that the real opportunity or where we should be focused is on specific use cases, right? Things that we think as society or as a legislature we view as things that are bad or things that we don't want to see, whether that's discrimination in housing or employment or some of the horrible things we've seen with regards to children and use of these chatbots. I've been deeply concerned in past years was some of the efforts to legislate at the lower technology level, regulating development of models and putting a lot of burden on the innovators and the entrepreneurs developing those models and recognizing the fact that the burden that falls on a 5-person startup or even a 100-person startup is very disproportional to a burden that falls on a Google or an Amazon or one of these hyperscalers that have all the resources in the world.
Tatiana, hi.
Hi.
Through your work at the FPF, you work directly with lawmakers, regulators, industry leaders across the country. You're tracking AI legislation, privacy legislation all across the world while engaging with international frameworks like the EU AI Act, for example. From your vantage point, how do global regulatory models affect US businesses operating here on the ground? Are you seeing states like Connecticut and others borrow from international frameworks, or is there a unique American approach being developed?
So here in the US, we are in a very interesting time, and we have a very specific system of federalism, right? States versus the federal government, and both of which have very different interests at this moment. The federal government, as you heard, is very much interested in a deregulatory environment, really looking to be able to have American dominance through the reasoning that regulation hinders innovation, and therefore we need to be able to allow innovation to flourish without any kind of restrictions or guardrails. The states, on the other hand, we've seen from both red and blue, Republicans and Democrats, a lot of responsiveness to some of the concerns that have happened lately, whether that is things like the Adam Rain case, where a kid had committed suicide or self-harm, and a wide variety of other cases due to chatbot encouragements. Nonetheless, there is still this clash where the Trump administration had put out this AI executive order preempting state AI laws or attempting to direct his agencies to be able to do so. So it kind of leaves a little bit of a limbo of confusion around, okay, there's a little bit of this catch-22 right now of, should we comply with this law? If the Trump administration aims to go after it, we might have some sunk costs there. Or should we not? But we also might risk enforcement by the state attorney general or any kind of state agencies, right? So it is a little bit of this catch-22 in this moment.
Josh, what's holding adoption back still among small businesses and medium-sized businesses? Is it capital? Is it talent? Is it regulatory uncertainty?
I think one of the other levers to adoption is just continued innovation, right? Like making these tools even more intuitive, even easier to use, embedding them in use cases that we encounter every day in our lives that are burdensome or tedious or where AI could be part of the solution. And, again, this is an area where I think innovation, startups are constantly working. So many of them exist to try to provide a more intuitive interface to the technology, make it more accessible to people.
And Tatiana, what specific policy tools have you seen work in other states?
A lot still in the air, as you mentioned, but I think it has been a lot of really interesting movement around states updating their existing laws, right? Particularly as it relates to data privacy and employment regulations. And so there are restrictions there, of course, in order to say what kind of data you can collect, how you can use it, if you need to do a risk assessment, the kind of data that you're collecting, et cetera. All of that also applies to AI. As I said, a lot of these existing law does apply to AI. And so we're seeing states like California, Connecticut did, Colorado, a number of others, New Jersey, have started updating those regulations and saying, okay, we do actually already have this data privacy law in place. There's too much going on publicly with the AI governance debate. Let's just take an incremental step through our data privacy law to move the governance in our state forward.
Right, and Senator, bouncing off of that, how do we scale that in Connecticut? I know a big part of your AI bill in the past was workforce development. Yeah. There's a ton of literature and podcasts, and people are talking about the disruption that's coming to the workforce.
How do we partner with academia for applied AI? As Josh said, when you're an entrepreneur, your head's down, right? Like you're not going to be able to figure this out, right? Sikorsky is going to figure it out. Electric Boat's going to figure it out. How do we help their supply chain, right? How do we aggregate and provide resources? How do we help with digital simulation for manufacturers and provide tools in addition to the adoption? How do we keep this ongoing conversation between academia, government, and industry? And that's the key to really winning, I guess, at this. And the goal is going to be to make Connecticut the most AI literate state in the country. I think those are the short term. Long term, we need to be making sure we're teaching kids responsible use and then lifelong learning.
Josh, how are you seeing this issue of workforce development and disruption kind of shape out in your position in academia, but also in the startup world as well?
In the context of all the discussions we've been having up until this point, just being very careful that we don't accidentally do things that send messages to these types of people that there are reasons you might not want to be in Connecticut. A lot of times in the legislative process, is something I learned my 3 years up in Hartford, there can be a bill that the headline of it looks very logical, something like on a bumper sticker we could all very quickly agree on, but that could have second or third order impacts that aren't well thought through or well understood, that aren't as often all the way thought through. And so just to be very, very careful about forays into those areas that we don't accidentally scare away some of the people who not just will build consequential companies and create a lot of jobs, but also can participate in some of these task forces around helping with workforce development and other things. We need those people to want to be in Connecticut. We have so many strengths in this state. I just want to make sure we're not accidentally encouraging people to innovate elsewhere.
A month into the legislative session, and there continues to be a lot happening at the state capitol that impacts businesses. We're going to close out the episode with some of those top stories. The state legislature this week approved emergency certified legislation adopting a long list of policies, the most sweeping measures imposing significant restrictions on warehouse distribution centers and a broadly worded private right of action that can add significant liability for employers. CBIA's Chris Davis noted the bill sends a troubling signal to employers considering expansion in Connecticut. The Government and Oversight Committee is reviewing 3 bills that focus on strengthening accountability and modernizing regulatory review. Now, one of those bills calls for regular agency reviews of existing regulations, a key piece of CBIA's 2026 policy solutions. The bills represent an important effort to improve transparency, efficiency, and predictability in state government. And the Transportation Committee is looking into a bill that will expand commuter access to transit services. Reliable transportation, we know, is a persistent barrier to employment, and legislation focuses on workforce access through funding on-demand microtransit services and expanding access to Connecticut's commuter incentive programs. Well, that's a wrap on this week's BizCast. We'll be back in 2 weeks with a new episode. In the meantime, give us your feedback and share any guests you'd like us to hear from by emailing us at bizcast@cbia.com. And a reminder, you can listen, like, and subscribe to our podcast wherever you get your podcasts. For a full list of episodes, head on over to CBIA.com.